to today's session. We are looking at question number 4 of April City Management Accounting. Ensure that you have the paper, have your calculator with you for closing, so that you are able to get all that we'll do in today's session. Question number 4, part A, reads, distinguish between marginal costing and absorption costing techniques. Distinguish between marginal costing and absorption costing techniques. So the question requires us to give the differences between marginal costing and absorption costing. So the differences arise from how we operate or how we prepare financial statements using marginal costing and absorption costing. So we have some 3 differences. This is question 4, part A. You can use a T-table to distinguish between the marginal costing. So on the one side we have marginal costing. On the other side we have absorption costing. So number 1, under marginal costing, only variable costs are included in the cost of sales. But in absorption costing, both variable and fixed costs are included in the cost of sales. Number 2, under marginal costing, fixed costs are treated as period costs. While number 2, under absorption costing, fixed costs are treated as product costs. Then number 3, we do not have application of absorption, no application of absorbing costs. But with absorption costing, we have application of the principles of absorbing costs. So this is no application of principles, correct principles. So those are the major 3 differences that differentiate between marginal and absorption costing. In marginal costing, we only include variable costs, which are also known as marginal costs. These are normally direct materials, direct labor, and direct expenses. So those are the ones we include in the cost of sales. But in absorption costing, we include both fixed and variable. Then we treat fixed costs as period costs under the marginal costing. Like where we have more than one product, we assume that all those costs that are incurred, if they are fixed under a period costs are simply those costs which are expensed in the period in which they are incurred. So we don't treat them per product. We include a total cost column so that we expense them in that period in which they have been incurred. But in absorption costing, we treat them as product cost. So if we have several products, fixed costs will have to be expensed on each and every product. So we don't include a total cost column in that case. Number 3, in our marginal costing, we do not have application of the principles of absorbing cost. So we don't calculate any over or under absorption of overheads. But in absorption costing, we have application of the principles of absorbing cost. So we have to consider whether we have costs that were actually incurred or those that are absorbed. So we absorb and we do not use the actual data as provided, and therefore we always have either an over or under absorption of overheads. Those are the differences between marginal and absorption costing. We move on to part B of the question. In part B, we are told that Bahati Limited operates a chemical process which produces 4 different products, namely CFT and from the input of raw materials plus water. Budget information for the forthcoming financial year is as follows. So the given details of raw material cost, initial processing cost, and conversion cost. We also have details on product output, sales, and additional processing cost. Additional information, note number 1, the company's policy is to apportion the cost prior to the split-off point on a method based on net realizable value. Note number 2, currently, the intention is to sell product T without further processing, but to process the other 3 products after the split-off point. Note number 3, an alternative strategy is being proposed so as to sell all the 4 products at the split-off point without further processing. If these were done, the selling prices obtainable will be as follows. So we've been given the selling price per liter and the products. Then we are required, number 1, to prepare a budgeted profit statement showing the profit or loss for each product, assuming the current processing policies adopted. So when we read question number 2, we need to interpret where the question is derived from. We have a process costing with work in progress, where we may sometimes have opening or closing or both opening and closing work in progress. We also have process costing with joint and buy products. So this question is based on process costing with joint or buy products. Joint or buy products arises where we have our material input in the processing, in the manufacturing process, but when it comes out or when output comes out, it will come out in various forms so that we have various products arising from the same raw material. And then we've been given details about that. So how do you prepare the budgeted profit statement? Budgeted profit is simply sales revenue minus allocated joint cost. So how do we calculate sales revenue? When we read number 2, I told that currently the intention is to sell product T without further processing, but to process the other 3 products after the split-off point. So that means for us to get profit, we require to exclude all the costs that are incurred beyond the split-off point. We also need to know the common costs which we have been given from our first table. So this will be calculated as follows. So we will calculate it as follows. Remove this. So we show the product sales value, which is in thousands, This is thousands of shillings. We need to show the costs beyond the split of point, which are also in thousands of shillings. We need to get net realizable value, which is also in thousands. We need to show the proportion and also show costs allocated. And then we will show the budgeted profit, which again is in thousands. So when we look at that question, the other part, we have budget information for the fourth financial year is as follows. If they're given the products, and the first product is product C, we are given the sales value, which is in thousands of shillings. This is 768. We have product F with 232, product T 32,000, and then product S is 240. In the same table, we have additional processing costs. These are costs which are referred to as costs beyond the split of points. So in process costing, when we have a raw material put in the manufacturing process, the costs that are incurred when those material products are put together before the split of points, those costs are labeled as common costs, meaning at the end of that process cost, the costs that are incurred will be for all the products before they split off. But now once those products are split off, any cost that is incurred for a specific product is normally allocated for that specific product, and those costs are known as costs beyond the split off point. So we've been given the costs for product C is 160, F 128. Here we do not have an extra cost, and then for S is 8. So in note number 1, we were told that the company policy is to apportion the cost prior to the split off point on a method based on net realizable value. So what's net realizable value? Net realizable value is simply where we are taking the sales. When you sell your product, what is the sales value? Take the sales value and subtract any cost that has been incurred for the sale of that product. And then to get the net realizable value, we are simply taking the sales value minus the costs beyond the split off point. And so we take 768 minus 160. For C, we have 608. Do the same for product F. This will give us 104. Here we do not have additional costs, so it's just 32. And then lastly, this will give us 232. So that's net realizable value for each and every product. So we want to know the proportion, but before we calculate the proportion, now we calculated the proportion. We have costs which were incurred when the material is not split off to these various products that we have. And so for us to know the specific portion for each and every product, we need to know the proportion at which we are to calculate each product on the common cost that was incurred. So in that case, we will need to get the total for the net realizable value, which will help us to calculate the proportion and then use that proportion to allocate common cost to specific products. So simply get the sum of net realizable value for all the products. And the total is 956. So to get the proportion for C, we take 608, we divide by the total, which is 956, and this will give us 0.6. The total ratio will be 976, not 56. Yes, 976. Then we take 608 divided by 976. This will give us 0.623. Do the same for product F. 104 divided by 976. The proportion will be 0.107. Then for product T, we will have 0.033. The last one, 232 divided by 976, we have 0.238. From there, based on note number 1 that we have to use net realizable value to allocate the costs, we now use these proportions and then multiply by the common cost, which will help us now to get the costs that are allocated to that particular product. So how do we calculate common costs? Number 1, we are given information on raw materials. We have initial processing cost and conversion cost. So common costs will simply be equal to 268 plus 264 plus 200. So this will give us a total of 732. So 732 are common costs that were incurred for all these 3 products before the split off point. So to calculate the allocated costs, beginning with the product C, we simply take 0.623 times 732. Times 732, and this will give us 456. Do the same for F. This will be 0.107 multiplied by 732. 0.107 times 732. This will give us 78. And then we go for the other product, we have 0.033 multiplied by 732, which will give us 24. And then the last one is 0.238 times 732, which is 174. So So once we get the allocated costs, we will now calculate the budgeted profit. So how do we calculate budgeted profit? So budgeted profit equals sales, not sales value, net realizable value, net realizable value minus costs allocated. And so we are simply taking 608 minus 456, which gives us 152 for product C. Then 104 minus 78 for F, this is 26. 32 minus 24, that's 8. And 232 minus 174, which will give us 50. And you can get the total for that. The total of the budgeted profit will be 244. So that was part B, Roman number 1. Then we proceed on to same question 4, Roman 2. In Roman 2, we are told that the profit or loss by product, and in total, assuming the alternative strategy was adopted. What was the alternative strategy? Look at note number 3. It is written 2, but should be note number 3. We are told that an alternative strategy is being proposed so as to sell all the 4 products and a split off point without further processing. If this were done, the same prices obtainable will be as follows. They will be given the same prices for the products if we are to go with that strategy. So based on Roman number 2, we are told to calculate the profit in case the company considers that strategy. So how do we go about that? After the split of points, if there is no further processing, it means extra costs or additional costs will not be incurred. So in that case, what we are looking at is simply consider the output, what is the selling price, get the sales value, and then proportion, and that will help you to get the profit. So we have these columns. We have the product output, which is in units. Then we need to know the selling price, which is in shillings, and this will help us to calculate the sales value, again, which is in thousands of shillings. And then we need to calculate the proportion from the sales value, allocate the costs, and then calculate the budgeted profit, which is again in thousands of shillings. So the products are C, F, T, and S. T and S. We are given the sales prices. Before the sales prices, we have output. In table number 2, we are given output in liters. Output is in liters. For product C, we have 400,000. F is 90,000 liters. T, 5,000. And S is 9,000. So we are assuming that this company will not process the full products after the spirit of point, meaning we are not including the cost beyond the spirit of point, right? They will not be incurred. So what we mean is, once we have this output, what is the selling price and how much will the farm gain in terms of the sales value? So we are given the selling price of 1.28 shillings for C, 1.6 1.64, sorry, this is 6.40 and then 20. So we use this to calculate the sales value by simply multiplying the output times the selling price. So we have 400,000 times 1.28. This will give us 512 divided in thousands. Then 90,000 times 1.6. This is 144,000. Then 5,000 times 6.4. This is 32. And finally 9,000 times 20, which is 180. So again we get the total. Total is 868. So once we get the total, we use this total to allocate the costs. Those are the common costs. So to get the proportion, we are getting the total for the product divided by the sales, the total sales value. And in that case, will be 512 divided by 868, which gives us 0.901. 144 divided by 8 is 0.166. Is 0.034, 0.037. Then 180 divided by 868, 0.207. So the total costs are still the 732. So we take the proportion and then we multiply by the total costs. For C we have 0.901 multiplied by 732. And this will give us 59. Can I round it off to 660? Do the same for other products. This is 152. Then once we allocate the costs, the budgeted profit is now this sales value minus the budgeted profit. Sales value minus the budgeted profits. Just to confirm, 512 divided by 868. Sorry. This should be 0.58, not 9. 0.58. Rounding off to 0.590. 0.50 when we multiply by 732. 0.590 times 732. should be 432, not 600. So correction. So from there we now get the budgeted profit, which is the sales value minus the allocated costs. So take 512 minus 432. This will give us a total of 80. 144 minus 122. This is 22. Then 32 minus 27. 5. And then 180 minus 152 will give us 55. Then we get the total. 180 minus 152 should be 28, not 55. 28. Then the total plus 5. And this will give us a profit of 135,000. So if you were to advise the firm, should the firm process further the 4 products after the split of point or no? The answer is yes. If the firm processes further, it is entitled to higher profits than when it sells at the split of point. Why? Because the budgeted profit after processing is higher than before the further processing. And that's how question number 4 was to be done. So always ensure whenever you are given a question on process costing, interpret if it is with opening work in progress, how do you go about it? If it has both opening and closing work in progress, how do you go about that? And if we have joint and byproducts, then what are the techniques to apply? We must ensure that you understand the way each part is done so that you do it as it's supposed to be done. So bye-bye. Let's meet in the next session. Thank you.